Here is your Bull and Bear Stock of the Week. An oil and gas limited partnership and a diversified food company. This week's Bull and Bear Stock of the Week draws me and our research director here once again to elaborate on each of these. Now, this company I know has been around for a while. This is the oil and gas limited partnership. Some people say One Oak, others say Oni Oak Partners Limited Partnership. OKS is the ticker. Either way, you can look it up and decide for yourself. This is the bull. What's going on here?
Yeah, let's just go with the OKS
ticker.
The ticker as the name. Yeah,
it's easier.
The primary reason for picking OKS as the bull of the week is twofold. Number one, I think in the current backdrop of an uncertain macro environment, turbulence in the market, and a whole range of uncertainties weighing on stocks, it is advisable to pick stocks that pay good, stable dividends and have lower risk profiles.
Okay.
Now, the oil and gas master limited partnerships would broadly fall into that category. They typically pay anywhere from 4.5% to 6% yields. Not a lot of commodity price exposure, typically fee-based income, very stable, and the stocks don't really move up and down as some of the others do. And why OKS? Because OKS really stands out on pretty much all the metrics that I discussed. They have one of the best growth profiles in the master limited partnership space. In fact, earlier this week, they came out with guidance which was significantly better than what the street was looking for 2012, 2013, and beyond. They will be increasing their distribution, that's what the dividends are called, in mid-double-digit rates, 14, 15%, or 2012, 13, and even up to 14. Now, driving that growth is their presence in this very prolific oil-producing region called the Bakken Shale, which is in the Williston Basin. This is North Dakota, Montana, and parts of southern Canada. And in fact, having been part of the oil covering group in my former life, I'll tell you that the Bakken Shale will be the biggest domestic onshore oil producing region in the U.S. Over the next 10, 15 years. And they have the presence and the opportunity to really leverage that position in that region in terms of oil and natural gas pipelines, storage, natural gas liquids, fractionation facilities. So overall, a very attractive story, long-term growth. The general partner or the parent of this partnership is OKE, One Oak, the major natural gas utility company. They have investment grade rating, a very good parent. So overall, a very attractive yield, growth, low risk story, ideal for this type of current turbulent environment.
You know, I remember when limited partnerships first came on the scene many years ago, and they were popular. Everybody was selling them left and right, and then they kind of faded for a while. But they still do have a place in investors' portfolios. Huh?
They sure do. They have a very small correlation with the broader market. So when the market is moving up or down, the limited partnerships, the oil and gas limited partnerships in particular, are not in sync moving up and down with them. So they are a very good diversification play in a broader diversified portfolio for investors. They also have tax benefits, though I wouldn't go into the tax parts of it, but they have tax benefits as well.
Okay. The bear of the week is Sara Lee Company, SLE, the ticker symbol. Now, we've talked about this company before on Stock Talk. They've had some problems over the recent past.
They do. And the reason I have picked them as the bear of the week is primarily two reasons. Number one is this faddish kind of mentality on Wall Street where they would just jump an idea And they will push every company to adopt that idea. A few years back, it was to grow through acquisitions, to bulk up, to add new business lines, and expand horizontally and vertically. The new idea, if it can be called new, is to split up and have increased focus. The buzzword is to have pure play business focus, and pretty much everybody on Wall Street is cheering up for that kind of activity. We have Marathon doing it, McGraw-Hill doing it, Tyco talking about it, and right. Sara Lee has bought into that mantra as well. So they are splitting up. They're going to have a meat company and a coffee company. The split is expected to take place sometimes next year. There are benefits to it. Some of the buzzwords being thrown around on Wall Street do have a place and do have value, but I would caution not to buy into it to the same extent as they are promoting it. There are some serious issues, and the most important one, aside from executing a very difficult transaction like the one they are trying to do, is the commodity price inflation that is weighing on the margin outlook for both of those businesses. What the management team has sold to Wall Street is that once we split, we will have more cost cuts in payroll and overhead and other SG&A overheads that it will offset some of the inflationary pressures that they are seeing from meat prices, commodity prices, coffee prices, and I don't think that's going to happen. I think the inflation that we have in these input prices are far more entrenched than in the rest of the commodity universe, and even if they are able to execute the split successfully as they plan to complete it earlier next year, the company will not have the earnings power that the folks are banking on, so there are positives in the split which may limit the downside risk in the stock. But there are some serious questions with respect to the long-term earnings power of whatever will be left of Sara Lee when all is said and done and the execution is completed.
Yeah, that's going to be interesting. Exactly what type of company is going to be left after it's all done.
That's right. So they will have, most likely, the Sara Lee name will go with the meat company. They will have some of the domestic bakery business with it, and the international beverages coffee business with some international bakery will go into the other company, and we don't know what the name of that will be.
Okay, thank you. Don't forget, you can also check out our bull and bear stocks of the day on our homepage, Zacks.com, if you're not there watching this video already. Check it out frequently because those stocks change each trading day when the markets are open. With Shiraz, I'm Terry Ruffalo.